Hi folks, this is Sean Hyman from Chart of the Day, and I just want to talk to you today about how to gain an edge using the MACD indicator. The first thing you want to always do with any indicator, I don't care what indicator it is you want to identify the trend direction. If you have a hard time identifying the trend direction, one indicator that you can use is not the only, but one indicator that you can use is the 50 period simple moving average. And again, we're on a daily chart, 1 year, going back in time. And so that means each one of these candles is a day in time, 24-hour period in other words. It goes back a year in history. And so since we can see that these points are heading lower overall, we know that the trend is moving lower overall. So it's sloping downward, it's pointing downward. We would want to look for shorting opportunities, which means initiating a sell first, going into the market by starting to sell first in hopes that it drops down lower in its price and that we can buy back to cover later on at a lower price and make a profit that way. So in other words, if we're shorting and we've clicked on the sell quote on our trading station, then if the pair heads downward, our account balance goes upward as the position appreciates in value. Okay, so with the MACD, what you do is when the lines come up and cross over, that's a sell signal. When the lines go down and cross and head upward, that's a buy signal. So since the trend is downward, we want to look for sell signals. And so the lines come up and cross here, so here's the sell signal, which would be roughly about in here on the chart. We've got another sell signal down here, so let's kind of eyeball our sell here. It would be somewhere around in here on the chart, and the pair continues to move on down. We've got a next sell signal right about in here, and then another one right about in here. And then it looks like we're just getting our latest sell signal right on the present candle that we're on. Again, this is not for a trading signal for you to act on, because you'll see this in after the fact. But on this Euro Aussie pair, there's a sell signal happening in the downtrend. So again, the higher probability trade to take would be to short, again with our stops well above. That way it gives this pair some room if you get any spikes up above, and as the pair moves down, then you can quickly move your stop to cover against any losses. As the pair moves lower, you can kind of split the difference somewhat between your break even and where the market is. Once you get 60, 70 or so, at least that many pips in the money, meaning down, the pair going down, then you can move your stop to break even or a little past it to ensure no loss and to help ensure a little bit of profit. So had this been a buy, like let's look at Aussie New Zealand, for instance. Recently it had been going up. The moving average is pointing upward. The price action is above the moving average, so we would want to be looking for buy signals. Here was a recent buy signal where the lines came down, crossed, and turned upward. And so let me move this over. That would put us somewhere roughly in here. So you'd buy in here and take this trade on up. And again, this is several hundred pip move since we're on the daily chart. So as this moves, say 75 or 100 pips in your favor, you can move your stop up to a little past break even. As it moves to 100, 150 pips, you can secure 50 or 80 pips or so, keeping your stop well away from the market, but also ensuring that you have some profit. So when you do get a retracement downward, it hits the stop, but it stops you out, but protects all the profit basically from the area of the stop on back. And so there's your buy signal. When this was headed downward, the moving average was headed downward, and particularly when the price was holding below the moving average, you would want to look for sell signals. So the lines come up, cross, and head lower here, so you would want to sell and look for the drop there as well. So that's an example of how to gain an edge using the MACD. Let the trend be your guide. Look to the trend first and to the indicator below the chart second. So judge the trend first and make that a habit. Force your brain to think in that order. The reason why I say that is because a lot of traders look to the indicator first and almost forget about the trend up above. No, do it in this order. Look for the trend direction first. If you have problems identifying the trend, use something like the 50-period simple moving average. I just picked that just because it's kind of a medium term length of moving average, and then that'll tell you the medium term trend direction, and then from there you can look, if the moving average is headed upward, you can look for buy signals to enter. If the moving average is headed downward, you would want to look for sell short entries to enter here, etc. All right. Thanks so much for watching and attending the chart of the day. And I would encourage you to spread the word, share this with your buddies if you feel this has been beneficial to you. Spread these links around where you can sign up for the chart of the day. Put them on your Facebook, your Twitter, things of that sort, and spread them around to your buddies so that they can get the benefit of these free chart of the day videos as well. I don't know anybody really out there that dedicates so much teaching and time freely to doing this, and so it's a great service for for your friends and your family to get into to learn more about the currency market. Thanks so much for watching. Bye bye.